Our next presentation comes from Tim Levandoski, VP of the Derivatives Market Business at Eurex. He began his career at the CME and has held numerous roles of trading in the trading industry, including diverse sales and trading positions in the cash and derivatives markets for several international banking institutions, FCMs, proprietary trading firms. Please join me in welcoming Tim to the podium. Tim?
Hello. Welcome, everyone, and thank you for giving me part of your afternoon today. I'm Tim Levandoski. I'm here representing Eurex, the International Derivatives Exchange. My goal during our short time spent together today is to provide a brief update on the Eurex front, some of the steps we are taking to remain in the forefront of the markets. And generally speaking, this is not meant to be a deep dive into any of the aforementioned topics. However, if you're interested in obtaining more specific details about any of these topics, then I ask you to hold your questions until a brief Q&A at the end of my presentation. Additionally, feel free to stop by our booth in the exhibit area to discuss during the trading show. An overview of our global footprint. We connect a variety of trading participants from across the globe. Our home office is in Frankfurt, Germany, with satellite sales offices throughout the world. I am stationed here in Chicago, handling business development, where we have our main North American headquarters. We have our host, our co-location facility in Frankfurt, access points throughout the world, where the green lines are here, and then additional member sites in more remote trading locations. From point-and-click discretionary traders to gray box participants trading around models, HFTs and or algo participants, we have different setup options for different participants' needs. This is a simplified org chart as it's much more detailed than this, but I wanted to highlight some of the relevant areas for this crowd. Namely, as you can see, there's a variety of different entities within our parent company umbrella. MDNS, our data feed and news business unit. Clearstream, our security settlement depository. Eurex, the derivatives, futures, and options arm, where I'm here representing. Xetra, our cash market. Eurex Clearing, our CCP clearinghouse, Eurex Repo, Eurex Bonds, ISE, our equity options area, and EEX, which is a benchmark for European power derivatives. The analogy of a vertical silo is our goal, where numerous parts of the trade cycle are within our control and housed in one entity. This is the same org structure, but in a different format, providing a visual on the end-to-end trade cycle. Again, trading, clearing, settlement, and custody. An update on the product front, beginning with our MDNS, our Market Data and Services unit, and then touching again later on our Eurex Derivatives product suite. MDNS, who is exhibiting with myself on the booth in the hall, they have several different business units internally. Probably the most prominent are the Need to Know News unit, Alpha Flash, which is our algo-focused feed for event-driven news trading. That delivers machine-readable, market-moving macroeconomic indicators, treasury auction results, Fitch ratings, and German corporate news. They also have a product called Alpha Flash Trader, which is our new discretionary trader-focused event-driven trading tool, which can be used as an add-on to several popular front ends such as TT and CQG. They also have Market News International, which delivers news and analysis for the global FX and fixed income markets, and then Market Data and Services traditional focus, which is on front office market data for vendors, service providers, and back office historical order book data for back testing. If anyone's interested in a historical order book sample, please stop by our booth at the exhibit hall. We can tell you what we make available for samples and what's available for purchase. Here's just an overview of Alpha Flash and some of their products as well. Some of the news products available on the left-hand side, and on the right, the trader version of the event-driven trader tool, which is basically a product you can put on top of TT or CQG. If non-farm payrolls comes up above 200,000, then you want to sell DAX and sell S&P, something along those lines. The ability to watch different markets at one time. Onto the Eurex side, our 2013 volumes are on par to equal or surpass our 2012 figures after a slight industry-wide dip in volatility and activity in 2012. Eurex's organic and inorganic growth continues. However, our focus is historically in financial products, the fixed income and equity index, with a variety of well-known benchmarks, DAX and Euro stocks on the equity index side, Boon Bobble shots, French bond futures, Italian bond futures on the fixed income side. I'll touch on a few of those in a moment. With regards to new products on the horizon, we have the addition of futures and options on MSCI World Indices, and those are based on the MSCI Emerging Market Indices. We're going to offer physically delivered FX futures and options, starting with 4 currencies and 6 currency pairs in third quarter of 2013. However, here I'll briefly highlight a few of the more active products in the spotlight as of late, specifically our fixed income complex, our volatility complex, and our Euribor futures. A bit of a historical overview or review of the interest rate environment in Europe. In 1999, we had European Monetary Union and the move to a common European currency, the euro. Interest rate policies initially flattened post-EMU, and as early as 2006, unique circumstances in individual countries began to cause several countries' borrowing costs to disconnect relative to Germany, in some cases very rapidly and very dramatically. Germany no longer served as an appropriate benchmark for non-AAA rated government debt in the Eurozone, i.e. Spain, Italy, Portugal, Greece, and France. Enter Eurex with dedicated products to serve as a proxy for different categories of risk exposure. Germany on the low risk side, France moderate risk, and Italy on the higher risk side. Why did we choose to develop instruments specifically on these countries? Quite simply, they're the highest issuance in the Eurozone, Italy, France, and Germany respectively. Smaller countries' underlying cash markets can tend to be illiquid at the most important times. Thus, as opposed to launching dedicated bond futures for each individual EU country, we've chosen the most liquid zones and products with the goal of using them as an accurate enough proxy for the level of risk you're focused on. As you'll soon see, the volumes and open interest in these products have steadily grown, confirming that the market views them as valuable speculative and hedging tools. With interest rate policy in the U.S. flatlined in recent years, we've observed many users looking towards the European curve for opportunities. Here, the slide is an overview of average daily ranges in the benchmark products I'm referencing on the Eurex side and the U.S. benchmark. Now, as we've begun to see some movements on the U.S. side, we're seeing increased spread trading between the USA and Europe. Correlation of some of the sovereign yields I'm referencing, year-to-date correlation matrix reinforcing the need for market tools to manage individual regional risk in the Eurozone. More reinforcement here for the need for these products, an overview of historical 30-day volatility in Germany's bonds in the blue here, Italy in the red, the US in the green, and France in the purple, demonstrating some of the differences in volatility in the different products. Our mid and long-term French bond futures and volume interest overview is shown here and a monthly chart. Again, you can see volumes and open interest in these products have steadily grown, confirming that the market views them as valuable speculative and hedging tools as well. Trading opportunities here include spread trading against the Euro Boon Bobble shots, the German curve and the Italian curve, and yield curve trading dedicated to the French side. Similar monthly volume and overview chart, as well a positive growth story for the Italian bond futures, similar trading strategies being targeted there. Referencing more products new on the Eurex front, along these lines we will soon launch options on Italian and French futures similar to our German curve options as a complement to these now firmly established futures products. Moving to an overview of one of the newest products recently made available for trade via terminals in the U.S. are our VSTOXX volatility futures. This is a monthly chart. Traded in these listed contracts linked to Eurex's key European volatility benchmark has more than doubled in the past year after VSTOXX futures gained the CFTC approval required to bring U.S. investors on board. U.S. tradability was granted in late 2012 and added to the increasing momentum and growth of our volatility complex. An experienced and educated Chicago volatility crowd at the CBOE has obviously taken to this product quite nicely as we observed increased volumes in open interest and improved liquidity. We continue to investigate product spec changes such as the multiplier, notional size, trading hours, listing of ETFs on these products. Any feedback on that front is welcomed. Why the V stocks? Well, it's generally known and accepted now that if you want to hedge a European equity portfolio, you need to consider a European volatility product. The most liquid listed product out there is the V stocks. You can gain efficient exposure to European volatility with less tracking error. There's a high negative correlation to the Euro Stoxx 50. Basically, exploiting the relative value opportunities between the V stocks and the VIX has been a very popular strategy. And generally speaking, the ability to diversify your portfolio, especially as a disaster hedge. The VSTOXX index is based on market prices of Euro Stoxx 50 index options. The VSTOXX does not measure implied volatilities of the at-the-money options, but the implied variance across all of the options of a given time to expiration. It's designed as a rolling index at a fixed 30 days to expiration through linear interpolation of the two nearest of the 8 available sub-indices, and the sub-indices represent the next 8 expiry months of the Euro Stoxx 50 options. Some of the volatility nuances. Here we see an overview highlighting the historical inverse relationship between the movement in the underlying Euro Stoxx 50 equity index and the VSTOXX measurement. The blue is the Euro Stoxx underlying, and the green is the VSTOXX price on a monthly basis. As we witnessed in the markets last week, as equities fall, volatility increases. More VSTOXX analysis. Diverging European and U.S. volatility dynamics have been a key driver of the growth of our volatility complex. The most dominant strategy that I mentioned has been instrumental to the VSTOXX liquidity improvement is a surge in interest in spread trading with a particular focus on long-term structural differences between the two benchmarks. Here you can see the curve on the VIX is much steeper as the ETNs put pressure on the front month contract, so it's a good trade if investors can monetize that term structure spread. There are indeed other similarities and differences between our Eurex volatility products and some of the existing products in the marketplace. Generally speaking, there are two obvious differences between the VSTOXX and the VIX. There's 15 components in our volatility product versus 500 in the VIX, and the fact that our 50 components are comprised of a higher ratio of financial stocks, which have been more volatile recently. Finally, our new trading system allows investors to trade spreads across 8 contract months with integrated calendar spreads. And prior to April, our investors had to do that manually. So in the interest of time, I'll refrain from providing much more detail, but I encourage follow-up contact if you're interested. And there's also some interesting information on our website, new tools for advanced volatility trading, simulation, comprehensive data analysis, and a tool to value VSTOXX derivatives on the education portion of our Eurex website. Switching back gears to another Eurex interest rate offering, Euribor futures have been offered at Eurex for a number of years. However, limitations of our legacy trading system prevented us from offering some of the basis tools required for maneuvering in these markets. With the rollout of our new trading architecture, which I'll reference shortly, we've added the full calendar spread trading matrix and the ability to trade strips, bundles, etc., more common in short-term interest rate trading for all expiry months. We have market maker support, liquidity provider programs, and our Prisma cross-margining benefits reaped when trading these products against the rest of our fixed income complex, being some of the compelling reasons we're seeing increased participation in the short-term interest rate futures at Eurex. This last point is an important one. The combination of our Euribor derivatives alongside our bond futures and options, cleared OTC swaps, and swaps futures will significantly enhance cross-margining and netting opportunities at Eurex. Eurex intends to focus our efforts on becoming the exchange of choice for Euro interest rate products. We're offering fee waivers for the OTC transactions, an attractive designated market maker scheme, 90% discount for those participants trading 20,000 lots per month in 2013, and a 90% discount for participants with open interest of 20,000 or more in 2013. Lastly, we've investigated different product specs specifically relevant to the Euribor products, and after feedback from our participants, we've decided to offer a unique time Prorata allocation principle for these Euribor futures, as opposed to price time priority, which is enforced at most of our other benchmark futures. I think we all know what price time is, FIFO, Prorata, I think we're all familiar with. Time Prorata allocation at Eurex combines the aspects of the Prorata as well as time allocation. This allocation of an order is based on the size and its timestamp. So amongst the best priced offers, the order with the oldest priority receives the highest allocation. On to our new Eurex trading architecture and the reason why some of this functionality is now available. Our long-term goal is to host all of our daughter companies, as referenced earlier, sitting on one common backbone. Each trading system has its own unique functional needs and nuances based on asset class and products. However, economies of scale can be utilized by putting as much as we can onto one common backbone. We moved ISE, our daughter company, onto this new common backbone in 2011. Eurex will finish moving in 2013, and Zetra, our cash market, will move in 2014. So a bit about the NTA in general terms. We successfully delivered a smooth launch by planning, preparing, and implementing a solid system and network infrastructure, consulting the customers during migration, improving our hardware and software and application development, all with the goal of increases in throughput and decreases in latency. As of June 10th, our mission is accomplished as we've migrated our final products, our fixed income complex. All Eurex products are available on our new trading architecture. We're seeing clear benefits from greater performance and proven Eurex reliability. We're already looking at NTA versions 1.1 and 2.0, which are being planned for the summer and fall of this year, where we're going to have extremely granular order-by-order feeds and plans to double our capacity and decrease the latency by 20%. Some general characteristics of our new trading architecture. Basically, the analogy is separating socket-based interfaces and having them for each part. A GUI interface, solution for trading and admin, distribution of reports via a common report engine, new trading interfaces for trading and market data interfaces for either netted or undetted market data, and enhancement of functionalities such as new order types and user-defined strategies. If anyone would like to obtain more detailed information on our NTA topology, then I'll touch a bit in a moment, but I would please ask you to pass along your contact information. We're happy to put you on a distribution list to receive a presentation every time we update and make major changes to our NTA. Without getting too technical during this overview, on the market data side, basically our participants are set up at the bottom. They read the data from one of two rooms where our products are hosted. Our matchers are located in two rooms with an active half in the one and a passive half in the other. It's a hot analogy, ready for failover if needed. It consists of partitions. There's 10 partitions in charge of all the Eurex products. And in case of disaster, a fire, something along those lines, it's unlikely that both rooms are affected. Trading will continue as normal in the unaffected room. So as I mentioned, our market data distribution is highly redundant. A failure of virtually any part of our infrastructure is highly unlikely to disrupt data dissemination. This reduces the risk for participants that rely on high-quality data for their investment decisions. On the trade entry side, there are 16 gateways for trade entry into the Equinix data center shared by all of our participants. These high-frequency ETI gateways in the Equinix facility provide the fastest access into our new trading architecture. To optimize your connectivity, basically you would probably set up two 10-gig fiber connects for our market data, two 10-gig cross connects for your trading, use state-of-the-art switches, have at most one hop between the exchange and your server, and use good NIC cards. Probably what's most interesting is the transparency, which we're quite proud of. We provide these very granular round-trip monitoring tools and statistics, rankings which are among the best in class. Basically, when a message hits the gateway, when it enters the Eurex network, the gateway into the matching engine, processing time, matching engine back to the gateway. You can reverse engineer every part of your full trade cycle and see where you rank versus your peers and what is within your capacity to improve. You can piece out portions of the trade cycle you do not and do have control over. We offer payload indicators, the trade cycle, to determine how hot the system is from the outside looking in. And we provide daily statistics on your private last mile performance between our high frequency gateways and your participant servers, which we consider to be best in class. So of course it's nice that our clients are happy with those timestamps, but the real value for the exchange is that clients are able to help us spot problems. We have just a limited number of resources that we can free up for analysis of our own system. Therefore, feedback from our clients plays a large role in optimizing our performance. Here's just a brief overview. Now that we've completed the full migration of products onto our new trading architecture, we're observing even more efficient response times compared to latency stats from our legacy system. Here, the blue is the round-trip time for futures orders in milliseconds, decreasing over time, while the green is the number of futures order book transactions per month in millions, which is seen steadily increasing. Again, more increases in throughput, decreases in latency. The green here is the response time steadily decreasing in milliseconds, even as its transaction load, in the blue continues higher. Now that the migration onto our NTA is complete, Eurex observes that the total market data volume published by our NTA to be 2 to 3 times larger than with our old trading system, and short peaks for the market data message rates are sometimes expected to grow by a much larger factor of up to 20. It's expected that the production environment will be capable of producing increased peak loads. With the NTA, the peak load capacity is expected to double with NTA 1.1. And measurements of all these data volumes will be provided once the products have been live on the new trading architecture for a while. More information about transparency, basically. This is the top 10 futures products daily statistics about the matching engine processing times here. Again, Eurex keeps in close contact with our end users. We try to provide as much data as we can with hopes that you'll challenge us. So as electronic trading increases, so does the level of risk associated with high-frequency trading participation. Thus, an equally important part of the trading landscape is risk management, especially risk associated with HFT activities, which can accumulate quickly. Therefore, avoiding risk, loss, and other four-letter words, and addressing risk at every possible level of the trade cycle is critical, lest one or several of these lines of defense fail. Some of the reasons or things that Eurex is doing to fulfill market access requirements and recommendations. Oops, sorry about that. Execution tools for fat fingers, cancel and disconnects, market maker protection tools, intraday limits, advanced risk protection, kill buttons, stop buttons, price banding controls, etc. Some of the more interesting are our latest risk offerings, our enhanced risk solution, which is a separate socket-based interface, which provides a real-time value for your overall margin exposure, and that's to be used in tandem with our advanced risk protection, which are dedicated tools available, which are post-trade risk figures that activate pre-trade risk limits. Basically, what you would do here is it's risk protection functionality offered by our clearinghouse, and it was rolled out in November 2010. We offered 3 different trigger levels to avoid latency to the maximum extent, and they would trigger pre-trade actions when the limits are breached. Again, these are post-trade risk figures that activate pre-trade risk limits as real-time as we can make them without impacting performance. Any of the following triggers can be set. These are initially not mandatory, but now some of the GCMs are mandating that their trading firms institute these, which we think is great. Basically, we'll set these hypothetically at, say, a level of 1.5 million, 2 million, and 3 million. A breach of level 1 will give you an alert message. A breach of level 2 will give you an alert message and slow down your algo to a time of your choosing. And a breach of level 3 will set you to halt and cancel all your open orders in the market. I know that last one sounds a little dangerous, but basically what we do is we also provide a 30-day rolling look-back report, which gives your lowest and peak daily margin levels, so you can look at what your margin exposure is at Eurex on a Fed Wednesday, non-farm payrolls, or a do-nothing Monday to know where to accurately set these levels so they're close enough where they do you some good, but not so close where they hinder you. Again, some further information on throttle limits we have to protect the trading system. Basically, each participant comes in on dedicated trading sessions, which we throttle at 150 messages per second or 50 messages per second, depending on if you're putting in good till cancel or good till day orders. We also have daily transaction limits on order to execution limits. On to the regulatory side, a number of market participants and lawmakers have accused HFTs of exacerbating swings in the markets and have called for stricter oversight. The US, UK, and a particular note for Eurex, BaFin, the German regulator, continue to review the rise of computer-driven trading. Several new HFT provisions are due to come into force within the next 6 to 9 months in the German markets as of May 15th. I will not expand on this too much at this time, other than to say that the criteria defining categorization as HFT activity and the associated messages HFTs send into the exchange are being reviewed by our regulators. Several requirements are such as order to trade ratios, excessive system usage, fees, flagging of trading algorithms, et cetera. These are all expected to come into force, and we expect to have more clarity on this in the coming weeks. Along these lines, Eurex continues to institute solid rules that address trading behavior for all of our trading participants, not just the HFTs. While HFTs do contribute to a significant portion of our activities, we are not solely focused on a speed or arms race. Our goal is to provide a safe, resilient trading system for all of our participants, not just the fastest participants. We feel we have solid rules that address trading behavior. Where our aim is to decrease outliers, increase the system reliability for all of our members, and have a fast, safe, and reliable system. HFTs are just one variety of our participants, what we feel they're a positive force. One reference, an analysis I'll give a brief overview of now, is an incident in 2011, which was an extremely volatile day in the DAX, when the DAX futures dived by 4% before recovering in a matter of minutes. A wave of orders hit the market, and our observations show that the high market liquidity that helped the market recover was the actions of HFT traders, and they initially absorbed the shock of the market. So as we mentioned, Eurex continually works to deepen our understanding of the structure and the dynamics of the markets we operate. From the exchange perspective, only we are privy to a wealth of extremely granular trade data related to the trading behavior of our participants and their orders. Thus, we performed a highly detailed analysis during some of the most extremely volatile days, and we've published the results. Our goal there is to helping to educate our market participants, the regulators, and the media. In summary, what our findings resulted in was the assessment that HFTs continue to be an important source of liquidity through both normal and extreme conditions. Their aggregate participation is not skewed to one time or the other, or one side or the other. They're not just sellers on the downside and not just buyers on the upside. And HFT's share of passive executions remains stable and high at most times. The majority of the aggressor side of the executions during extreme conditions are actually not HFTs. At this point, I won't get into too much detail, but I really would like to point everyone to a very interesting series of videos which we posted on our website and been shouting from the rooftops to the regulators and the press, both here and overseas. An overview here, again, this is a gentleman at Eurex. His name's Bernard Hausman. He's specifically focusing his resources on analysis of our market participants. And what he's presented here is an interactive video you can find on our website, which is a clearer visual depiction of HFT's activities during extreme market conditions at Eurex, specifically this DAX incident that I mentioned. On the far left here, we have a snapshot of the DAX order book. Just picture it's the top 10 bids and the top 10 offers. With that kind of bar chart that's half empty and half filled in with green or red. The non-HFTs are the empty part of each bar, and the HFTs are the colored part of each bar. And basically, this interactive video shows the movement throughout the whole crash during that time, and shows that HFTs were constantly on the bid and offer all the way down and all the way up, and again, not just sellers on the way down and buyers on the way up. Very insightful video, which we've received a lot of praise on. Finally, on to our new margining methodology. I'd just like to touch a bit on this important topic, as all important traders are sensitive to margin. Eurex will be rolling out, in order to accommodate some of the market demands, we're going to provide a more adequate risk calculation. We'll be introducing our new portfolio-based risk management model, Eurex Clearing Prisma. As of May 27th, this was the first phase of a shift to a new methodology for calculating our margin requirements. Prisma will allow our GCMs to take a portfolio-based approach to analyzing their risk. All margin requirements will be determined by considering the entire portfolio positions rather than considering each position and then aggregating those results. So there'll be liquidation groups for different asset classes and new cross-margining within these groups. What's important to take away here is that there'll be no absolute value for individual products in Prisma. The margin is now highly dependent upon each participant's individual portfolio. So knowing the demographic of today's audience, the main takeaway to take note of for the trading participants is that there will be more capital efficiencies, more efficient use of collateral, and offsetting capabilities. Our new Prisma is far more complicated but far more accurate than our risk-based margining. We're going to have a staggered migration approach and a transition from our risk-based margining to our Prisma, basically a hot, warm setup where it will be depending upon the firm's clearing member when the clearing member decides to migrate into our new Prisma methodology. We'll currently be running everything in parallel for a short term with release 1, and this margin migration will continue into 2015. We will support our members throughout the decision-making process with special migration tools, which should make everything smooth. Finally, I'd like to point out a link to our free daily newsletter that we publish and send out to our subscribers at the start of each European trading day. The European Market Outlook gives a very nice overview of the fundamental analysis in the Eurozone and a technical overview, etc. There's no spam sent out. You just put your name on the distribution list one time, and you receive this very insightful Market Outlook newsletter at the beginning of each European trading day. So with that, I hope you've been able to gain a perspective on Eurex's position in the global marketplace, including steps on the exchange side, which we feel put us at the front of the advance of the financial markets. If there's any questions on the exchange side, product side, our new trading architecture, the risk controls, high-frequency insight, or new margining methodology, please come ahead with your questions. Else, feel free to stop by our booth to chat in greater detail about any of these topics. Thank you.
Thank you very much, Tim, for that fantastic presentation. Are there any questions from the audience? We've probably got time for one. No? Okay, well, do be sure to stop by the Eurex stand, and also you can speak to Tim and the rest of the team face-to-face in person, but we'll move on to our next session. Thank you.
Thank you.